Hello traders. Right now we will see 3 things that we can use to predict S&P 500 stocks, equities. Not to predict the final price, just to predict will the equity market start to go down or not. That is the question. And there was a perfect question related to the desert island that I just watched on the YouTube from the Fidelity Quant Denise. And I just want to watch these videos very careful.
Okay.
Might be right.
Last question.
Yes.
You're on a desert island.
Okay.
And I can only give you
one CD.
I can only give you 3 pieces of data or data sets that you can use to formulate a stock market outlook. And I know you're not a big prediction person, you're a quant, but we're trying to get to like what's important to you and what would you throw away. So you could ask for anything. You could ask us for economics. You could ask us for technicals, valuations, fund flows, sentiment. What are the 3 things that you would most desperately want? And if you solve the market with these things, we'll rescue you from the island.
Okay.
We'll take you off the island.
Median earnings growth.
You want to know what, but prospectively, you want to know how it ends the year or
either? You can give me the historic data.
Median earnings growth.
Median
let's
earnings
start
growth.
there. Why is that important?
Yeah, so that is actually the driver. I mean, ultimately, we always say, especially at Fidelity, stocks follow earnings.
The median stock in the S&P.
Yeah.
You want to know the earnings growth for each stock, but the median across
level.
the market.
Median growth, yes.
Okay.
I mean, you could say cap weighted growth, but median growth is actually a little bit more predictive, especially as it relates to the job market. So to the extent that the median company in corporate America is profitable, then they tend to hire, right? So that's why like payrolls are a lagging indicator. Profits are a leading indicator.
So you care about the median versus the overall growth level, because the overall growth level could be like NVIDIA and Microsoft, and then that tells you nothing about the direction for all these other businesses.
Correct. It gives you a clearer perspective.
That's interesting. Have you ever heard
the
that
overall
before?
economy.
Okay, just to explain a little bit. So what we can watch very often start from the S earnings. So you have a 90-year historical chart. And if you go to this chart and with orange line, I'm watching the earning and the S&P 500 is a blue line. As you can see, when earnings is going up, S&P 500 earnings start to climb, going down, S&P 500 is going down and vice. And you can sometimes see how this correlation between this high. So what you need to do, usually when you want to make some kind of the long-term, quarter-term, create some projections, you can go, for example, an S&P earnings growth rate table. You can have a .com website and various websites, and you can see here, this is the earnings report. For example, you see we got this huge decline couple times, December 2015, then we had December 2020, COVID, then we have in the 2022, and a lot of times. And you can see, for example, the quarter, and you can see in 2020 how we got 1, 2, 3, 4 months down, and then in March started. That is proof that we are going again up. And look, after that, 60%, 70, 110%, etc. And of course, we had a low period in 2022. Then we started to go up again, and the last cup high. So this is very good indicator, and it's a good thing that is show how is important. Number one, what will happen with S&P 500. So let me see another.
Credit spreads, which we just talked about. So credit spreads, sometimes when they're very wide, it's usually indicative of a bottom. Sometimes when they're very tight, it's usually indicative of a top.
Are they predictive though, or are they in the moment?
No, they're pretty predictive. So the quartiles, again, there's a statistical relationship. The tighter the valuations, the tighter the credit spreads have been, the more likely the S&P is to go up over the next year. So you can give me trailing credit spreads, and I can say that there is a relationship here between that and future.
What credit spread data do you want? Do you want
high yield?
You want to know how tight or wide?
Yes.
Okay.
The differential.
Very interesting.
Oh wait, but probably only at the extremes, right? Because if they're very wide, you say, okay, stocks probably get killed. It's probably close to a bottom.
Yeah.
And if they're very tight, you say the economic backdrop is probably pretty good.
Yep.
What about if you're sort of in the middle?
Yeah, in the middle, there's like a relationship. So
yeah?
the tighter the credit spreads are, the more likely the stock market is to advance the year forward. Yes.
Number 3.
we are watching the second indicator. The second indicator are credit spreads. So on this chart, on macromicro.e website, we can watch US credit spread and S&P 5. The same thing you can do for stocks, for everything that you want, of course, but the credit spreads are very, so we will just monitor this moment. This is a big crisis, 2008. Look there, this blue line represent the US credit spread. The spread wide, very wide. Look what's happened. S&P 500 is going down. Now, every time when we have this kind of fear and opportunity as a credit spread wide, you see some drop in S&P 5. And here again, you see the small drop. It's a small push upside. And here you see the big drop in 2020 during the COVID, and the same times you can see the credit spread is going. Now you see in 2022 up to 2023, this is the moment of the interest rate and everything, but you can see how spread is going up. And now when you have the bull market last 2 years, look, you can see the credit spreads, how it's tight, very tight, very tight. Here we got on March 2025, little push, and we had a little down. So this is so big correlation, but you have some advantage. Watch the credit spreads. And now let me the number 3.
Yes. So number 1 is median earnings. Number 2 is credit spreads. And number 3 would probably be valuation spreads, which is another quantity expression if you're in the market, which has very little relationship to valuations.
Wait. You got to give us more on that.
Right.
Valuation spreads of what?
So it's just the difference, and this is, Adam Parker would love this. It's just the difference between cheap and expensive stocks, and the names change every single cycle, but you usually have this blowout in spreads, which is an expression of fear. When investors sell anything they think is risky, they buy anything they think is safe, and they have this gap. If you are willing to,
bigger gap means more fear. And that's good or bad?
That's good for contrarian investing, because the more fear there is, the more likely it is that you've already priced in the fear.
So you actually want to see that?
Yes.
Okay.
So that's what I would always want, because
relative
if you see
to
that
a year
very
earlier,
wide,
like what are you measuring it against?
Relative to history.
Relative to history.
Yep.
Where are we today on something like this?
On a median basis. So when you look at sort of the equal weighted S&P 500, we're still in the top quartile, meaning that there is still a lot of fear.
So good.
Yes.
So where are those spreads? Like healthcare stocks versus semiconductors?
So yeah, I mean, you could take individual stocks like that, and again, it rotates pretty fast. So the cheap and expensive.
But we have like the depressed part of the market, and then problematically though, the depressed part of the market is the defensive part right now. Does that change your opinion at all, or
no? I mean, it definitely doesn't change my opinion.
Data.
Yeah, I think that yes, I still want the data.
Okay.
Yeah.
Is that the order in which those 3 things are important?
Probably, yeah.
Okay. I'm asking you that very specifically because I think we're going to title the video like these are the 3 desert island indicators investors want.
Yeah.
So, okay. If I spotted you a 4th, is there one that comes top of mind, or those are the big ones?
No, I think those are the big ones.
Okay.
Yeah.
All right. Did you have fun on the show today?
I did have fun on the show.
We're going to do another 2 hours.
Okay, great. I'm ready to talk.
Denise, where have they been hiding you? Yeah. I know you have a podcast. I'm going to listen. I want to listen to your podcast now.
Sure.
What is it? Let's tell the audience what it's called.
It's called Market Insights Podcast.
And the number 3 is a little bit hard to find. Do that, find value stocks on one side, low value stocks on the other side, try measure that value and everything. I found something, growth stocks, trans value stocks over the past decade, which is very similar thing. And you can see that when you compare that rebased indices, you can see the big correlation, which can help you a little bit understand what's happening. For me, the number 3 is really hard to find and analyze. For a good quants, it's good. But I think that the first 2 things, earnings growth and the spreads, it's a really, and I just want to see more of these. We traders, it's very hard to predict market, and when we find some good correlation charts, analyze mentals, it's over. So this is it. I wish you a great day, and bye bye.